Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings without falling asleep. Wish us luck. Today we're diving into a semi-annual report for some funds under the Northern Lights Fund Trust. It's like looking at a report card, but for your money. We're going to look at the shareholder reports for a few different funds. These reports give investors an update on how the funds are doing. Think of it as a checkup on your investment, seeing what's working and what isn't. We will take a peek at a few interesting financials. First up is the Aster Dynamic Allocation Fund. This fund tries to balance growth and income. So let's see how well it did over the past 6 months. We're also going to look at the costs, the investments, and the general financial state of the fund. One of the first things you should always check is expenses, how much the fund is costing you to manage your money. For the Aster Dynamic Allocation Fund Class A shares, the costs are about $72 for every $10,000 invested. This translates to an expense ratio of 1.40%. It's like paying 1.40 for every $100 you have invested. Knowing this will help you determine if this is a good deal or if you're paying too much. The fund's net assets are around $70.9 million. This is the total value of everything the fund owns minus its debts. The report also shows a portfolio turnover of 97%. This means that the fund is actively trading its investments, buying and selling nearly its entire portfolio every year. High turnover can lead to more transaction costs, potentially eating into your returns. Looking at what the fund invested in, about 96.7% is in exchange traded funds or ETFs, which are baskets of stocks that track a specific index. The other 3.3% is in money market funds, which are safe, short-term investments breaking out per sector, which is a specific segment of the economy. About 54.1% is in equity, which is stocks, 38.1% in fixed income, which is bonds, and 5.9% in alternative investments, which are things like real estate or commodities. The top holdings of the fund include things like the SPDR portfolio, S&P 1500 composite stock market ETF at 14.1% of the fund's net assets, and Janus Henderson AAA CLO ETF at 12.2%. These are the big bets the fund is making. The report states that there were no major changes during this period, meaning the fund stayed consistent in its approach. Next up is Aster Dynamic Allocation Fund Class C. You might be asking, what's the difference? The holdings are the same, but Class C shares typically have a different fee structure than Class A shares. For Class C shares, the costs are $100 invested or 215%. That's more expensive than the Class A shares. The holdings remain the same as Class A, as well as asset allocation and top holdings, meaning the only real difference is the fee you pay. Just like Class A, no big changes to report. Now let's move on to Aster Dynamic Allocation Fund Class I shares. Again, the main investments are the same. It's all about those fees. The expenses drop with these shares, costing you about $59 for every $10,000 invested, which comes out to 115%. Typically, Class I shares are for bigger investors, so they get charged less. As with Class A and C, we see that the holdings, asset allocation, and top holdings are the same. This is due to the fund's structure. Again, the fund reports that there were no big changes. Let's transition and talk about Aster Sector Allocation Fund. It has a different approach compared to the Dynamic Allocation Fund. This one focuses on investing in specific sectors of the economy. The fund seeks capital appreciation, meaning it aims to grow your investment, unlike Dynamic Allocation Fund, which seeks a combination of capital appreciation and income. For Class A shares, it costs $74 for every $10,000 invested, with an expense ratio of 1.40%. The net assets here are much smaller, around $18 million. The portfolio turnover is 56% lower than the Dynamic Allocation Fund, indicating less buying and selling of investments. Looking at investments, we see the fund has 98.4% in ETFs and 1.6% in money market funds. Sector weighting reveals that about 84.6% is in equity and 13.9% in fixed income. The top holding is Technology Select Sectors SPDR Fund at a whopping 23.6% of the fund's net assets, followed by Financial Select Sector SPDR Fund at 17.3%. It's clear the fund is betting heavily on technology and financials. These are the sectors it's focused on. The report notes no material changes, another period of consistency. Let's check out Class C shares of the Sector Allocation Fund. Remember, it mostly affects the fees. Class C shares are costing you $140 per every $10,000 invested, which turns out to be 215.15%. The extra price from the Class A shares might not be worth it if the fund doesn't perform better. Again, the investment strategy remains the same. No major changes were reported. The Class I shares cost you $61 for every $10,000 invested, or 115%. As a larger investor, these Class I shares provide the best value to investors. Unsurprisingly, the report shows that investment strategies were the same as the other two funds. There were no big changes during this period. Here's a very brief financial checkup on the two funds. The findings are as of January of 25. Here are key numbers that we found. FR2 Dynamic Allocation Fund. Total assets were around $72 million. Total liabilities were a little over $. Dollar Sector Allocation Fund. Total assets were around $18.2 million. Total liabilities were significantly lower at $28,607. The Astor Dynamic Allocation Fund had net expenses of $498,246, while the Astor Sector Allocation Fund had one fine which eat into your returns. Finally, the net increase in net assets, meaning after all income and expenses, the Astor Dynamic Allocation Fund increased by about $3.4 million, and the Astor Sector Allocation Fund increased by about $3 million. There is nothing interesting here. Looking at these funds more broadly, a few things stand out. The Dynamic Allocation Fund is much larger, but also has higher expenses. The Sector Allocation Fund is more focused, but its performance is heavily dependent on the specific sectors it invests in. It is clear that the fee structure depends greatly on the class that you choose. Overall, it seems these funds are trying to deliver value through different investment strategies. However, fees can make a big difference in your returns, so choosing the right share class is crucial. Thanks for watching Corporate Decoder. If you found this helpful, please like, subscribe, and let us know what other corporate filings you'd like us to decode.